What's going on, guys? Brian's here. Today is Thursday, September 1st, 2022. The market is closed, and what we're looking at is Facebook, or Meta as it's referred to now, on the daily time frame. It's been a while since I've done a video just on a couple intraday trades in which I've taken, but like most of my videos, I'm hoping to share some key information that you guys can use moving forward in some of your other trades. The key takeaway in today's video is mostly going to be about how you should stick with your trade, even if it's a plan that you had from the day prior. So what we're looking at again is Facebook on a daily time frame. We've seen that things have been in an aggressive downtrend, as that's been the theme for 2022 right now. And let's actually take a look at it on the intraday time frame so you guys can see the trade in which I'm referring to. So yesterday, Facebook was up pretty large. Whenever something is up really large in a bear market, it actually ends up being very easy as a trade idea. You're generally just going to look to short what's referred to as a fade, or you can take the trade short generally as at the open if you see some sort of confluence or some sort of supply. So that's what I was looking at yesterday as it's gapped up. So let's jump into the volume profile. Let's actually zoom out right here and you guys can see. So I'm just going to mark this one key level right here, and we'll change the color as we usually do. If this is your first time seeing the volume profile, you guys can check out the playlist in which I've done on the YouTube channel. It has quite enough videos covering a lot of the questions that you might have. And let's just turn off the name, because we know this is just yellow because it's a point of control. But more importantly, we can draw a zone around this entire area right here, signifying that is some sort of supply in the area. Also going to just change the color so we know what it is when we switch to a different time frame. Red usually means supply and green usually means demand. So just lowering the opacity so it makes it easy to see on a smaller time frame and not conflict with our candlesticks here. Now, if you're curious as to why I drew the zone out like that, it's just because this is where the high volume nodes were from this day. Yes, you can draw it around the entire value area. So this is the value area high and this is the value area low, but I'm more interested in just where there's the high volume nodes right here. And it's intended to be a scalp. So as we narrow things down here, now we're looking at the same thing. So this is just a 30-minute time frame, 20 days, using Thinkorswim as the platform here. And this volume profile script is shared in the description in this video. And what we can see right here is that price was rejected in this area. And what we can see is that price was rejected right here. So if we dial it down to the even smaller time frame, now we're looking at the intraday 5-minute chart. You guys can see price didn't quite come up to the actual level, but that did not stop me from actually taking the trade. Let's actually just jump over to the Quant Trading App Discord right here. And this was just yesterday pre-market. Meta is on fire from the news, and the news did not necessarily care about it. I was just looking for a trade to short. Again, anything that's up pretty big on the day when it comes to these mega caps, they're more than likely going to retrace, because the overall sentiment and the overall context of the market right now is bearish. So looking for a fade, as it's sometimes called, is not a bad idea right now. So that was yesterday's trade. It was just a quick scalp on the open as a retracement back down to VWAP. It was a quick 3-minute trade, which is not normal for me. I generally don't trade at the open. But whenever the opportunity is this easy, again, this stock was up pretty big and it was coming into a supply zone. So I was willing to hop into the 160 puts, which is right here. And for the following Friday expiration, it was a quick scalp. If we take a look at it on the chart right here, just from here to here, the puts ended up going from about $2.19, I believe was my entry, something around here. And then I got out right about here or so. So it was a quick little 30% return. But after I got out of that trade, later on in the day, let's actually just check to see right here. So this is just showing the entry and exit. And then we can see that the momentum was in Snap, Meta, and Netflix. So this is me just pointing out that I didn't have time to actually draw out a complete plan like I usually do, because this is just, again, a quick scalp. I caught it right before the market opened. I saw how much it was up. Didn't care to really digest the news or anything like that. And then if we keep it moving right here, we can say that it's similar to Meta's supply. So we can see this was also Netflix. So this was, we had a little bit more confluence on Netflix for a short, but I missed this trade here on Netflix. Now, if we scroll down here, one thing I pointed out is I should have gotten back into the Meta puts, the 160 put for next week, as it pulled back to my entry this morning. This is something that normally when I'm not distracted with other positions or I'm not managing other positions and so forth, I like to keep a watch on the same contract in which I'm traded, especially if you're trading a contract that's not in the weekly expiration. If you're trading the following week, you'll generally get a really good entry later in the day also, as theta is not quite destroying the option as much as it's doing the weekly option. So if you miss the entry at the open, it's always good to keep it on watch. It's as simple as right clicking on your chart and setting an alert for in case price comes back to your entry, because you guys can see from here to here, this was a 30% return, 40% return, right? Now, if you were able to catch the trade later in the day, it ends up being the same 30-40% return. Now, let's just say you missed that trade the first day. It doesn't mean you need to forget about it the following day. Just keep the same contract on watch, just keep the same ticker on watch, because you end up getting a similar trade the following day. So in this case, I ended up catching the same trade that I ended up missing yesterday here today. So just mentioning that again right here, I was able to get back in it for 219. So it was the same thing as it was yesterday. So from here to here, missed this entry here, so the second trade, and here comes the third trade, taking it from here, but this time having a lot more conviction and a lot more confidence behind the trade. Was able to hold it for a little bit longer, but as you guys can see, here's one trade, two trades, and three trades using the same tickers, same options, same game plan essentially, because as we take a look at the chart, we can see Facebook ended up, or Meta, it's still going to take some time getting used to calling Facebook Meta these days, but as you guys can see, it ended up coming close to the zone. Now again, I'm not so concerned with getting the pinpoint entry, as it's not really important for most of the trades that I take these days. I was actually managing a few other positions. I just had the limit order set, I got filled, and then I just carried on, managing some of my larger positions, and then came back later and take the profit on this trade. Now, if you do miss entry 1, entry 2, entry 3, generally speaking, a stock will give you more than one entry. That's something I learned earlier on in my trading from a couple other experienced traders. First lesson that I learned actually was staying with a stock and staying with a trade and taking it as many times until it doesn't work. So in other words, if this same contract, let's just say Meta was to gap up tomorrow and there was even more confluence to take the same trade short, just take it again until it doesn't work. Obviously, it looks like it's pretty bullish right now, because considering that it was able to recover this much, it recovered just like the rest of the market did, and then tomorrow is a Friday expiration, so I'm not likely to be taking the same trade tomorrow, as I don't think it's going to work out as well. However, let's zoom into just today's price action. All these levels that you see on the chart, except for the ones in which we just drew in, so I'm actually going to remove these right here. These were for the volume profile. These levels are just straight from the quant trading app platform, and we have this blue level on the chart is referred to as max pain, and in the background you guys can see this purple. The purple is just signifying that that is the strike price for tomorrow's expiration, that has the highest absolute gamma. Now Meta sells off. If you miss that entry, here comes your second entry. I've done videos on this probably about a year and a half ago, because this was the core basis to my trading. I used to wait until after the 10 a.m. reversal, and then I would generally catch the backside weakness for trades. So this right here, classic multiple confluence. Here goes our 50% retracement. So you guys can see, if I were to turn off all of the studies, this is simple trading right here. Price action, stock runs up, but then it sells off. So this is the first sell off, and then it bounces and it retraces to the 50% retracement. After the opening drive volatility, you get a nice easier trade where you know where to set your stop loss, because at this point, let's just say you're trading equity and you're short here and you decide to scaling a little bit more short here, you're essentially risking less than 50 cents if you stop out over 166, and then you're going to be targeting low of day as your first take profit, and then you're using the Fibonacci extensions as your final profit targets. And you guys can see how this played out here. Generally speaking, the safe exit is going to be the low of day. So right here is a great trade, and you guys can see how fast that worked out. So this was a 10-minute trade right here, just getting short. If we turn on the studies again and we take a look for confluence, and let's actually turn off the Fibonacci's because it might get a little bit confusing. This gray level on my chart right here is VWAP, and then we have the 2-day anchored VWAP right here. So right within this vicinity, we have multiple confluences of 2 VWAPs. We have the 50% retracement. We also have max pain, which tends to act as strong support and resistance throughout the week. And then we have the absolutes gamma strike right here. The absolutes gamma strike, for those of you that don't know, is significant for GEX analysis. And this strike price is going to tend to have a lot of liquidity around it, as price will naturally gravitate towards it, or this strike price will also act as a magnet dependent on the overall net GEX for the ticker, and that strike price will also act as a repellent dependent on how implied volatility plays. So it's a very important strike price to be aware of. And as we can see that right here, the market ended up reversing and Meta came straight back towards this strike price because it's in coincide with the max pain theory, gamma exposure, and then we had just key technical levels here. So 160 has been a key level for Meta for a while. A couple weeks back, I actually took a short. So this was the short in which I took for a couple weeks back, just targeting it. This was open on August 16th. It was a broken wing butterfly targeting 160. So when it was at 160, I actually opened up an equity position to swing for the longer term down there. So I'm aware of 160, which is why I hopped in the 160 put. It's just been a level that's been very important for Meta. If we take a look at it again on the daily time frame, you guys can see that it spent a lot of time around this 160 area. area. So if it's being accumulated or being distributed, that's something we'll figure out in the future. But I like this area down here for Meta, so I'm keeping it on watch as it's presenting a lot of beautiful trades down in this area, both intraday and for a swing trade. If I point out the gamma exposure, this right here is from the quant trading app site. So this is just showing some of the key levels. Again, the levels are on the Thinkorswim platform, so we don't need to be looking at this, but this is if you want the up-to-date information as the gamma exposures changes throughout the day. We can see the open interest and the volume that's going into certain strike prices as price is trading, and then we can take a look at an analysis for the overall gamma exposure for Meta, and we can see right here that the 160 level is very significant as it has a lot of high negative gamma, and then we can see right here how important 165 is as it is the absolute gamma strike as it's signified right here, and that's just meaning that this is the strike that has a lot of gamma exposure for the option sellers, most importantly the option dealers, aka the market makers. What's interesting here is, I'll leave you guys off with this, is that there's actually not that much. I was surprised to see that there's not a lot of negative gamma for Meta, surprisingly, and it seems as if, I don't know if somebody knows something, but this is pretty good right now. I mean, compared to the rest of the market, I was shocked to see that. I thought it would have been looking a little bit more bearish, but just from what I've been seeing, it's surprising to see that there's a lot of call open interest for the 200 strike right here. I don't know which expiration that is. I mean, I can figure that out by analyzing it and seeing if it's, you know, in leaps or if it's in short-term options. Just as I'm doing this video, I wasn't intended to do this, but out of curiosity, let's just submit this and see if we wanted to analyze just the options that expire for this year. And then let's scroll down here and we can see that, yeah, there's still a decent amount of positive gamma up here at 200 strikes so for this year. And let's isolate it one more time by eliminating all of the short-term contracts, and let's just take a look at the monthlies for September and October and see if we catch anything. Scroll down. Okay, so a decent amount, almost half of all the calls, it seems, is for the monthlies right here for September and for October. And lastly, we'll just check it out with just October to see if someone knows something. So it looks like no. So it looks like most of that call open interest is actually for September, but this year it still looks pretty surprising. I'll do a deeper dive into this to see if I want to take a bigger picture trade on this, but it's just interesting to see. So I just wanted to give you guys a little bit of a preview of, you know, some of the gamma exposure for Meta, and as we jump back to the intraday time frame. So as a recap, moral of the video, if you will, is if you're aware of a zone and a ticker gaps up aggressively during a bear market, feel free to look for a short setup. That means grab some puts. You can always go the following week out to make it a little bit safer. Take your profit and then keep it on watch for later in the day, because it's probably going to give you another entry. So in other words, if you shorted it here to here, that's great for an opening drive play. Then it gives you another entry. You can short it again from here back down to here. And then on the third day, you end up getting the same entry, short it back down here. If you miss those, here goes a classic intraday setup, 50% retracement, multiple confluences in the same area. Even if you are not aware of gamma exposure, you can just use price action, and VWAP is fine also. And then you get another 40-50% return. And if we take a look at the option here, trade number 1, trade number 2, trade number 3, and then right here would be trade number 4. And all of these trades accounted for close to 40% returns. If you average about 30% return on these trades and you didn't catch the larger move, that's 30% times 4. And this, in my opinion, is pretty easy or pretty simple day trading. Thanks for watching, guys. If you enjoyed the video, like it, leave a comment down below, and I'll catch you guys in the next one.